Well, how will the upcoming tax changes impact small businesses? Will the new taxes hinder small business growth? Here now is Bill Risch, Tax Counsel at the National Federation of Independent Businesses, and Keith Boykin, editor of the Daily Voice and indeed a CNBC contributor. Bill, let me kick off with you. How are your members taking this?
Well, our members are very concerned about a number of the new taxes, whether they're the taxes that are included in the health care bill, or they're the pending expiring taxes that were passed in 2001 and 2003. 75% of small business owners, doesn't matter what size you are, all small business owners, 75% of those businesses pay their tax at the individual level. So with the 2001 taxes set to expire at the end of December, at the end of this year, all those small business owners are going to see their taxes go up. You throw on top of that things like capital gains and the additional taxes included in the health care bill, plus state taxes, local taxes, unemployment taxes. That's just a tax burden that's going to take more money out of small business owners. So it's going to be more money being spent to shore up this fiscal tidal wave we've got coming at the federal, state, and local level. And that's going to be less money being invested in small business job growth, small business expansion, and trying to get us out of this recession. At the end of the day, none of these state, federal, or local governments are doing anything to control spending. Every small business owner's employees have had to cut back.
Let me stop you there. Keith, am I right in thinking there are specific tax breaks that should offset what Bill is talking about?
Well, yeah, you're exactly right. In fact, there are small business tax credits in the health care bill that specifically provide 35% assistance for small businesses to pay for health care premiums for their employees. It goes up to 50% by 2014. This is not going to hurt small business. It's going to help small businesses to have health care reform. In fact, no small business is required to even have health care. This law doesn't require you to do it, but if you do it, it's making it easier for you to do it. And I just have to reject one final comment about what Bill is saying, this notion that all small business people are hurt by this. This is totally not true, in part because it only affects businesses that are employees whose taxes are, or rather individuals whose income is above $200,000 a year, couples above $250,000 a year. So we're talking about very wealthy people. Most of the viewers of CNBC probably won't even have to pay higher taxes because of this bill.
Oh, I'm sorry. I really have to take issue with you there. I think you'll find most of our viewers, and we sell advertising on that basis, are extremely wealthy, and most of them would pay at the higher rate. Bill, specifically, come back if you would. Yeah. On this question of the tax breaks, which Keith lays out there.
Well, we've done some research on the small businesses that are likely to be hit by these taxes. And like I said, 75% of small business owners pay their taxes at the individual rate. And while it's about 10% of overall businesses, what we found is that businesses with between 20 and 200 employees, it's upwards of about 36% and higher that are reporting $200,000 and $250,000. Those businesses account for 33.8 million
I'm sorry,
workers.
I'm going to be terribly rude and interrupt you now. Why, if a small business person, man or woman, is earning over $200,000, should they not pay the same tax as me sitting here earning over $200,000?
Sure, that's a good question. A lot of this has to do with the way those businesses are taxed. The money that comes into the business doesn't mean that it's going right back out and being spent on, yachts or fancy trips. That money stays in the business and is used to pay for expenses. But for example, with an S corp, the money is taxed as soon as it comes into the business. It doesn't come out right away. So that's the operating capital that the business has. So the problem is when you raise those individual tax rates, if you're structured as an S corp, or you're structured as an LLC, or you're structured as a sole proprietor, that's the money that you're going to spend to run your business. So the problem is what we're taxing is working capital.
Well,
and at a time when you can't get loans and you're taxing the working capital, that's a problem.
I think this is all based on the misperception that tax increases always hurt the economy and tax cuts always help the economy. The reality is a lot more complex than that. President Bush, for example, the last President Bush, cut taxes twice. Unemployment soared after his tax cuts, and we had
I think the unemployment went down.
It went up. It went up to 6% from what it was in the Clinton administration, and we lost 3 million jobs in the last year of the Bush administration. Whereas when President Clinton, who I work for in the Clinton administration, the Clinton White House, when he actually raised taxes, the top marginal tax rates to 39.6%, you know what happened? The economy grew. We had the longest peacetime economic expansion in U.S. history. The idea that tax cuts actually always benefit and tax cuts always hurt is just not borne out by historical data.
Last word, Bill, last word.
I don't think you can look at this in a vacuum. We also, in the 90s, cut the capital gains rate. We got the budget under control. And the fact is, we were hit by a major recession in 2000 when the tech bubble burst. And those tax cuts went a long way to helping small business owners. Right now, is tough getting loans. Lending is a
Okay.
bigger issue. You know, this capital, this working capital the business has is needed to invest in the business, expand the business, and grow jobs.
Gentlemen, thank you both for your contribution. Thank you. The debate will continue. Bill and Keith there
Thank
with a view
Thank
on
you.
small businesses.